Now on Bloomberg Intelligence, Munis in Focus.
All right, Munis in Focus is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. All right, today's Munis in Focus is going to kick us off with Tom Kozlik. He is the head of public policy and municipal strategy at Hilltop Securities, normally in Dallas, but here with us in New York. Hi, Tom.
Thanks for having me in the studio. I appreciate it.
Thanks for joining us today. So you were taking a look at flows into Muni mutual funds. And so far in 2026, positive flows in 19 of the first 21 weeks. Why is demand so steady?
So I've seen some challenged markets. I've seen some markets with opportunity. I think that this is a modestly challenged market with lots of opportunity. And I think that there are a lot of investors that are taking advantage of that. There was another $2 billion that flowed into muni funds just yesterday, right? So it's something that I've been consistently talking to investors about over the last couple of weeks.
Tom, what impact is Washington policy having on the municipal bond market?
Yeah, it's creating some uncertainty. It is there, especially in sectors like higher ed. And if there was federal money that was flowing to state and local governments, there's a little more uncertainty about that. That being said, there are certain sectors like K through 12, like higher education, that we're having kind of demographic challenges already. In both of those sectors, we've seen downgrades outpace upgrades, not only in the first quarter of this year, but all of last year as well. That being said, credit largely in the municipal sector has been pretty solid. And so while I think credit selection is important, for the most part, folks, I'm still talking to folks about, the traditional municipal market and strong credit that we've seen over the years.
Okay, so there's federal policy, there's also state policy, and I believe we have about 5 states, California, Connecticut, Maine, New Jersey, New York, along with DC, that have come up with some version of a millionaire tax. What does that mean for the muni market?
So one of the big reasons of why it is that money has been flowing into municipals and why investors think that municipals are so attractive is because of the tax-exempt income. I think over the last year or two, investors have had some decent gains, and to a degree, they're recognizing and/or in some cases going back to municipal bonds because they're trying to take advantage of that the tax exemption. So what the potential policy that you're talking about kind of adds to that attractiveness for municipals.
Where specifically, what segments of the muni market do you see opportunities right now?
So I think that there is opportunity. From a big picture perspective, yields are becoming more attractive. One of the things that we expected coming into this year is that yields were going to be lower. Absolute yields have become increasingly attractive, and they're likely to get even more attractive. I mean, one of the things that I was talking to investors about through the end of last year and even the beginning of this year is to kind of act before yields drop. That's not really the case anymore. Really, I'm talking to investors about being selective in certain sectors, taking advantage of kind of what the market is giving them day to day until things. Will things get volatile? I'm not sure, but things could get even more volatile depending on what happens with the Mideast and even the supply-demand dynamic in municipals.
So you want to be selective when it comes to sectors. What about where on the curve you want to be?
Yeah, so that is one of the things that's evolved over the last kind of 6 to 9 months. A lot of investors are choosing to be kind of in the short end and in the medium range of the curve, which I have no problem with. That being said, from a relative value perspective, a little further on the curve, you're going to get a little more value for your dollar there.
How is a changing of the guard at the Fed impacting your outlook when it comes to munis? We have, of course, Kevin Warsh now replacing Jerome Powell.
Yeah, one of the there's just more uncertainty there, right? There's more uncertainty. It is something, yields is something that I think we're really going to have to focus on even more for the rest of the year. I think that the levels of where we're seeing municipals now. Again, I said this, and I've said that I've been writing this and saying this for months. I think that the levels that we're seeing now, no matter who the Fed chair is, no matter what happens in the Middle East, no matter what happens on the macroeconomic side, investors should be taking advantage of these in some cases, generationally attractive yields.
The number one question from your clients, what is it that they all ask you about?
It depends. One of the things that they ask about is they ask about where they should be investing on the curve. That's one of the big things that they ask about. One of the things that folks they were concerned about last year was the threat to the municipal bond tax exemption, because as I mentioned, that tax exempt income is something that they very much value. So they're worried about.
But that didn't happen.
It did not happen. And there is not an imminent threat right now. One of the reasons that I was concerned about the threat last year was because of the tax policy, the big beautiful bill that eventually got passed. But one of the things that concerns me is that, we just hit the debt to GDP ratio just hit 100%. Back in 2017, it was about 70%. Back in 2010, it was 61%. That's when the Bowles-Simpson Commission came out and proposed to potentially eliminate all tax expenditures, including the tax exemption. So one of the big things that I talk to people about is let's pay attention to what happens on the policy side, because we want to make sure that we're taking advantage of that tax exempt income while we can.
You just mentioned that you're monitoring policy. We also still have geopolitical risk ongoing, uncertainty around the Fed. What is the one risk that keeps you up most at night?
Right now, it used to be pensions. Not as concerned about pensions now. One of the things that I am really paying close attention to is what the potential impact AI could have on the labor market, right? That's something that a lot of people from different perspectives are concerned and are watching. And there's kind of two sides of that as far as I'm concerned. On the one hand, there could be some stress. I actually think there's going to be more opportunity where that's concerned. I actually think that there's going to be higher levels of employment, especially in certain areas, in certain geographic areas, and certain sectors.
All right. Thank you so much for joining us today, Tom, especially in studio. Tom Kozlik, Head of Public Policy and Municipal Strategy for Hilltop Securities, for our Munis in Focus.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.